Welcome to Drill Down Earnings. We have the latest quarterly results from F5. Stock market sure likes these numbers. Let's take a look. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. We'll look at F5. Wall Street, of course, just likes a beat or a miss. This was fiscal third quarter earnings for F5, and it was a beat. The guidance very much a beat. Here's what the business actually did. So in the quarter, the company reporting over $700 million in sales and guiding towards annual revenue of $2.8 billion, raising their guidance with the CEO, François Locoh-Donou, whom we love because he's been on the Drill Down podcast in the past, talking about software growth, continued growth in global services. He doesn't talk about hardware because that didn't do as well. We're going to dig into that a little bit here, but specifically citing large enterprises changing their IT infrastructure. And if you're hearing a suggestion of AI, yeah, you got that right. But the real issue here is it looks like the worm has turned for this company. It was still a sort of overall revenue decline of negative 1%, less than the same time last year. But that seems to be a rebound. And indeed, in their commentary in the conference call, they suggested that's exactly what it is. Specifically, their perpetual license business, which is their old business of selling software that people pay long-term licenses for, that did okay, increasing by 9% in the quarter. But gradually, they've diversified both towards software, and of course, lots of service sales that go with that, and away from systems, specifically away from licensed software. Licensed software has been squeezed out of their software model here, where it's still there, and as I mentioned, it's growing a little bit this quarter, but generally speaking, that is becoming less and less of the overall software revenue for this company. And the result is an increasing amount of revenues are recurring revenues for F5. 77% of revenues in the quarter were recurring revenues. Of course, we all like that because you know what's coming down the pike, even as you try to increase sales of for new customers and new licenses and so on. And their operating margins have gotten better and better, even as they've struggled through this little period here in the last few quarters. So how did the stock react? It went crazy. Up 14% in after-hours trading as soon as the results came out. That's on top of the 14% increase over the whole year. Put another way, the stock's performance has essentially doubled with these results over the last year. The results today, I should say, has doubled the return over the last year in one fell swoop. Now, again, the focus on software is so important here. Yes, the services business is 56% of revenues, but the growth in software is improving margins. It's got more of a recurring nature to it. And interestingly, now the systems business, 18% of revenues, it sounds like that's starting to pick up because of AI. On the conference call, they talked about how companies are starting to look at systems at F5 that might have been designed for telecommunications networks and networking are finding great appeal to companies building out data centers, trying to find really, really quick ways to move massive amounts of data, very short distances. F5's got solutions for that, and they're finding out they're selling some of that to these AI data center build-outs. Here's the CEO.
So we're starting to see AI as a catalyst on the horizon for hardware. So specifically for the few large enterprises or service providers that are building large AI factories. One of the big issues in building these large GPU clusters, obviously, is the cost of training these models. And our technology, specifically our high capacity, high performance traffic management technology, big IP, is perfectly suited to improve the efficiencies of these large AI factories and thereby reduce the cost of them. So, we have already won a couple of opportunities in this area. We think it's going to take time to develop, but we're starting to see that as well as a potential positive catalyst for FY 2025.
Yes, that was François Locoh-Donou. We're going to speak French because, the Olympics, and like I said, he's one of our favorite CEOs. But interesting things happening for this company. I think across the telecommunications equipment infrastructure world, you're starting to see some applications for AI, and we're hearing more and more of that on these conference calls and company reports. We're keeping our ear out for that. But I've got one number that tells you a whole lot about F5's quarter and why the stock is up so much in after-hours trading right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So third quarter fiscal year earnings from F5. Here's the important stuff you really want to remember here. So yes, it's their fiscal third quarter, over $700 million in revenues. But what was really interesting in the quarter was the raised guidance, the suggestion that their hardware business is coming back, even as their software business does so well, but their system sales down 32%. That's not the number I want you to remember. The number I want you to remember, the one number that means a whole lot, a 20% increase in software sales in the quarter, guiding them to a better world of system sales in the future. Good things for F5. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. This is part of the 6.5 Media empire. Of course, you can check us out on X at Cory TV, at Drill Down Pod, and TikTok, and on Instagram, and all of our earnings reports on the 6.5 Media page on YouTube.